Greetings, members one and all of the Salivation Nation. Could there be another attempt to corner the silver market like the Hunt brothers did back in 1980? Well, perhaps so, but this time with a different metal. Let's explore. Yes, this comes to us from Forbes. And I think it is quite an interesting notion to consider, especially the demand that nickel, the metal, has, especially in terms of batteries, nickel-cadmium batteries and the like. So let's see how this plays out here. So there's attempts to corner a metal market invariably don't end well. If not jail time, what has happened with silver in 1980 and copper in 1995. So when the market and nickel inverted, last week warnings were issued that an old game was being played in one of the new generation of battery metals. The term inverted essentially means that the short-term price of a product, whether a metal or a government bond, rises above the long-term price, which is unnatural and a sign of trouble ahead. An inverted bond yield can be interpreted as a recession pointer. We've heard a lot of talk about that in the last month or so here. Silver had its crisis when the three brothers who were heirs to the Hunt oil fortune acquired or attempted to acquire 1/3 of the global supply of the metal. Unfortunately for the Hunt, they used a lot of debt, and when commodity exchanges changed the rules, they face expensive margin calls, followed by a Securities and Exchange Commission investigation, a $1 billion loss, and eventual bankruptcy. The copper cornering of the mid-1990s was a rerun of the game, with variations, but essentially involved a metal dealer working for Sumitomo, a Japanese trading company, buying physical copper plus taking options and future positions to corner an estimated 5% of the world's copper, enough to dictate price movements in a relatively illiquid up market. And that just goes to show you why it never really became huge news. When you have 1/3 of this global supply, it's much different than 5%, but still, it's enough to cause some concerns and move the price. So Hamanaka's corner, the wheels came off for the dealer Yashua Hamakana in 1995 when new copper mines flooded the market for the metal, depressing the copper price at a time when Sumitomo held a big long-term position at prices inflated by Hamanaka's trading, which Sumitomo later claimed was rogue activity, but confirmed that the affair costed around $2.6 billion. The copper and silver background is important because last week Citi, a leading investment bank, raised the Hamanaka specter despite the 69-year-old being long out of the news and out of jail for serving an 8-year stretch. According to Citi, nickel might be undergoing a Hamanaka moment because the physical market for the metal has become disconnected from the futures market, and a premium price routinely paid by Chinese steel mills, which use nickel to make stainless steel, has flipped into a discount for the first time ever. The escalating tightness on the Little London Market Exchange and the disconnect with the loosening physical indicators outside the exchange remind us of a similar market dynamics during this Sumitomo affair in 1995 and 96. A glimpse of what's happening in nickel, which has moved into the metal traders call backwardation, short-term price higher than long-term, can be seen in the LME data, which features a sharp fall in stockpiles and a sharp fall in the price, the reverse of what we might be expected because the surplus, if anything, generally drives the price down. On the LME, the nickel stockpile has dropped by 45% since earlier this month, falling from close to 160,000 tons to 88,000 tons. But since October 14, when the nickel price hit a 5-year high of $8.14 per pound, and it has fallen by 8% to $7.48 a pound. In China, Something far stranger has happened, which adds to the theory that there is unusual activity in the market for nickel, which has been attracting intense interest from investors because of its use in the batteries used in electric cars as well as stainless steel. Until recently, Chinese nickel consumers paid a premium of around $250 a ton for prompt delivery of the metal, but last week the premium flipped into a $50 a ton discount, a very rare event in metals markets. In Australia, a major producer of a particular type of nickel used to make batteries, there's been a burst of corporate activity, including plans to resurrect the mine from made famous in 1969 as a centerpiece of what became known as the Poseidon scandal. Speculators fired by a one-off high-grade nickel assay delivered during a strike by Canadian nickel workers drove the 1969 to 70 price of Poseidon shares up by 35,000%. From 53 cents to $187 in 6 months. Though, as with most red-hot mining stocks, it soon fizzled out. Poseidon, however, is back as a born-again company backed by one of Australia's richest men, the iron ore billionaire Andrew Forrest, who has a 17% stake in the stock, and a private American company called Black Mountain Metal, which has a 20% stake. This is interesting to see all the different dynamics involved, and just imagine silver as being instead of nickel being used in this story. The Black Mountain, which is led by an American woman named Ashley Zumwalt Forbes, not related to, I don't think, Forbes.com, bills itself as a pure play battery metals miner, having earlier this year acquired control of Lanfranchi, another old nickel mine. As if all that isn't enough to raise a flag about the nickel sector, it's interesting to note that Poseidon also owns 2 other mothballed nickel mines, which once operated by Russia's leading mining company, Norilsk Nickel. City's tantalizing comparison with nickel today and copper during the Hamanaka era is supported by an argument that if tightness in supply, as shown by the falling stockpiles, was matched by broader fundamentals such as strong demand, the Chinese nickel premiums would be at least holding. The fact that they're falling sharply is a strong signal that the exchange backwardation is not matched by physical fundamentals. And when a market is not matched by fundamentals, it's worth wondering what is happening and asking whether nickel is following silver and copper in the past. And I will go on to say here, as commentary on this particular story, is that could this happen again with silver again? And I would say yes. I mean, look what's going on with JP Morgan, with the short selling. And but will it be relegated to just a few brothers or a few people? No, my guess is it's probably cooperation from far more, because the whole system is a lot more complex and checked and balanced, I think, for this type of thing. And so therefore, I think that more than likely silver can be attempted to. Now it would fail, but it could mean that the prices could move in one direction or another because of this type of activity. And tracking mining supply, I think with finding new nickel mines or new copper mines is probably much more likely than finding silver mines, especially silver mines that are primary mining companies. Those are becoming harder to find primary silver mining out there. Silver is a byproduct of other metals, typically, and so more than likely it would have to be in conjunction with these other metals in order for it to take place, which complicates things a little bit more now than would have been the case back in 1979 and 1980 when the Hunt brothers did their thing. So I would say that there would be an attempt. It may be caught a lot quicker, but it may be just enough to move the price one way or another for a time, just like kind of what's happening here with nickel. An attempt, but again, look, it was caught very early and quickly, and so this is something that is pretty amazing to see, and the patterns are out there and where it leads in the end. So there you go. There you have it. Nickel is attempting to be cornered just like copper was in the 90s and silver was. Post your thoughts below. Thought this was quite interesting to see how this was happening here with nickel right now and how it occurred with copper and, of course, silver. I'd like to extend a multitude of gratitude to you all for watching and encourage you to please rate, share, comment, and subscribe.